Hi everyone and welcome to the weekly update with me, Richard Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. And certainly moving into this week, it is one which is jam-packed with economic updates that are sure to produce significant volatility for the markets. Sure to also make the pulses race as well. So you need to be careful. You've got impacts on global growth, you've got factors that could also impact on the ECB's monetary policy and also ending up with non-farm payrolls on Friday. So moving into this week, risk appetite has remained elevated, and that has seen financial stock markets push to all-time highs, and also seen the VIX volatility index push to below 12, which is a significantly low level. However, you need to be also focusing on the fact that you've still got treasury yields on the US bonds that are remaining at extended low levels, which certainly I think could potentially store up some problems in the future if there is not a retracement of that move. Okay, so in the FX markets, the dollar index has pushed above 80.4, which is a significant breakout resistance level. Now this takes the dollar index to a 3-month high. Now that is around about a big pivot level that we need to be watching out for, and has been on the dollar index for the past few months. So some interesting moves that are going to be seen on these markets in light of this. Certainly euro dollar, for example, breaking down to a big top pattern, move below $1.3670 was the key breakdown, and that certainly now implies a move back towards 33.75. However, there's, as I said earlier, a significant amount of volatility that we could see throughout the week, certainly in light of the inflation data that comes out on Tuesday and also the ECB on Thursday, which potentially could see some short covering if the markets find that these announcements are less dovish than potentially could be seen. Okay, so in terms of sterling dollar or cable has also had a significant breakdown, although it's a little bit more mixed than euro dollar. It's broken down below a big uptrend, but it has found support on the 89-day moving average, which means that that's a key level that has provided support on numerous occasions in the past few months, and it's sort of maintained this outlook. But if it can hold above $1.6680, then that is a key level of support that's remained intact. Looking back at dollar yen has rallied straight back towards that 102 big pivot level that it's been trading around for the past few weeks, and that I think is a key line in the sand for dollar yen. If it can break above there, then that would suggest that the bulls are regaining control again. But subsequently, if there's a failure at that resistance level, then you'd be talking about a retest of the lows once more. So an interesting time for dollar yen. Moving on to equity markets. The equity indices, as I said, have been breaking up to all-time highs. You've got the S&P 500, which is above 1902 and pushing on towards the breakout target around 1950. Currently, as I said, that breakout support at 1902 is the level that we need to hold above. Similar sort of story on the DAX, where the DAX has broken out above 9,810 and is eyeing a test of the 10,000 level as we speak. Now, FTSE 100 is a significant laggard, however. It's not broken out yet, and that I think is a significant move. And the fact is that I think that FTSE continues to struggle to break out, needs to move above 6,895, and as yet it hasn't done that, and I think at the moment it could well struggle to do so. Okay, looking at the precious metals and gold, certainly gold has had a very bad few days, 5 straight days of decline, following on from that Ukrainian election that actually produced a little bit of certainty amid the geopolitical tensions that have been wrangling in the region, and that's sort of acted to calm the mood of the market a little bit. That's taken a bit of a war premium out of the gold price. Subsequently, gold has pulled sharply lower. Gold is now back below the 1268 key support, and that is up now eyeing a test of the 1231 low. A little bit oversold at the near term, but we could see selling into pressure on the upside at the moment. Similar sort of story on silver. Silver's key support at 18.80 has been breached, and that now opens the key June 2013 low of 18.19. Now, silver has started to try and form a little bit of support, but I think this could be just a mere unwinding of the move until we see further selling pressure down towards that 18.19 level. Okay, so throughout the week we're looking at the announcements that are going to be moving these markets. And aside from all the manufacturing PMIs that we're having on Monday, you've already had the Chinese manufacturing and the European ones as well. You're still looking out for the US number at 3 o'clock on Monday afternoon. 55.5 is the expectation there, so watch out for that. But on Tuesday, the key focus after the second and unofficial Chinese manufacturing PMI out from HSBC, we're going to be focusing on this Eurozone inflation data. That is going to be a key driver of sentiment throughout this week, I think. The expectation is for 0.7% on the month for this flash number, and anything above that would potentially start to put a little bit of doubt in investors' minds as to how much monetary easing the ECB could engage, because certainly this number is going to impact on the ECB staff projections, which Marajagi said last month were dependent on the were going to be driving the ECB Governing Council's decision on Thursday. On Wednesday, we've got the service sector PMIs and the ADP employment report. Before, as I said, on Thursday, we've got the ECB, which is the big piece of monetary policy for the week. Certainly, the market is already factoring in a rate cut of 15 basis points, down to 0.1% on the main refinancing rate. But there's also the possibility of negative deposit rates, also an extension of the LTRO, and in an extreme circumstance, maybe even full-blown QE. So lots of variables at play there that could impact on this market. Certainly, if for example, if the ECB doesn't go as dovish as the market had been anticipating, there could be a significant short covering on the euro. So that could be the risk for the week. And finally, on Friday, we're going to be looking at the non-farm payrolls figure. Always a big number, but I think in light of what was going to happen before that on the ECB, I think it's slightly overshadowed this week, but still a really important number for the market. 288,000 last month. It's expected to come in at 219,000, which is around about where that ADP numbers are forecast to be as well. So coming after the Q1 disappointment of the states, they need to continue to create jobs. I think anything above that 200,000 on the payrolls number is going to be taken as a fairly positive number on Friday. Okay, so that's this week, and I wish you good luck with your trading throughout the week. Don't forget you can follow me on Twitter at HandTechRich, and until next week, I wish you good luck and good trading. Thank you.